Okay, whenever it's a bullish setup or buy setup, you have to keep these signs. These are the entry signals. Okay, these entry signals should only follow after what? After you have seen the major sign of weakness in the background, like oversold, selling climax, jump across the creek, all those kind of things. Got it?
Yeah.
And once you have established the bias in the market, only then this is the entry point. Okay, how you will enter. Got it? Hello.
Yep.
No entry point, no supply. After no supply, what we have?
FO versus no result.
EVNR, and then we have what? Hidden
No demand.
spring. No. I'm just talking about buy entry points. Buy entry point. So we have hidden spring, or we also call it as key reversal. Okay. And then we have spring itself, or we have test of spring, right?
Yeah.
Okay, these are the entry points. That's it. Just you have to remember. Okay, no supply. Obviously, you know the volume. What will happen during the no supply, and all of these no supply, the volume should be lower than the previous two bars. After versus no result, you will have a small range bar with a huge volume. Hidden spring and key reversal can have two kinds of volume. It will either have a after versus no result type of volume, or it will have a no supply type of volume. Got it? Spring and test of spring can also have can also have effort versus no result type of volume or no supply type of volume. Got it?
Yeah.
Okay. Because these are entry points. Okay. Now, for example, if you're entering over here and we have established the bias, we're entering over here. Just take this random chart, go to the 3-minute time frame. Okay, this is the entry point. Let's suppose this distribution. Okay, this is obviously once you draw the channel from here, it becomes oversold right over here, oversold, test, and then secondary test, AR, after AR falling through ice, test us, okay, then we have upthrust here. So let's suppose the London opens right over here at this point, let's suppose, or the New York opens at this point. Now this bar is a very huge bar, right? And this is what hidden spring. I told you the rule. Whenever you see the hidden spring and something like this, you can either
uptrust.
Sorry.
Isn't this a hidden uptrust?
Yes, this is hidden upthrust. This is hidden upthrust. This is hidden upthrust and it is also an upthrust. Both. It is upthrust of this. It is hidden upthrust of this range, this small range, and it is upthrust of this big range, right?
Yeah, right.
This has both characteristics. Now, if you go to the 1-minute time frame, you will easily notice this. Where is it gone? I think it's gone to back. Okay. Now let's suppose the London opens right over here. So you can enter where? Either on this point. Okay, this is what? Hidden upthrust. Or you can enter here. This is what? Effort versus no result.
No result.
Make sense? This is London open, let's suppose. So this would be your next entry points. Easy, because you already have a reference line over here. Okay, but what happens? Let's suppose after the London open, the price just goes below here and price just tested it, never tested it, and then breached through it. And it keeps on breaking through it, and then it tested this region. Now you will take your trade on this part. If you do not see these kind of setups here, then you will be taking your trade on this setup. So what is this here? Can you tell me? No setup. I could not find any setup over here. Okay. But if this is falling through ice, I told you, after falling through ice, what happens? The price goes in a
distribution.
Yeah, distribution range, right? So you can just place your range like this. And now what do we have here? No demand, right? Now you can place your trade. Got it? But this is 3-minute time frame. I need on 1-minute time frame. Oh, this is 3-minute time frame. Oh, what to say? 1-minute time frame. I need to see on a 1-minute time frame. Let's see. Okay. So let's see if you miss this opportunity or we did not find this setup. What are you going to do? Where's the efforts with no result here? The efforts no result lies over here. Okay, 1 bar, right? 1, 2, breaks down. And now what do we have? This one, exactly. Hidden spring, right? So we can draw the channel like this. Now you have entry point. Okay, you have this entry point. Let's suppose this entry point. And you have, let's suppose this entry point, you have this entry point. So all of these are good entry points to enter. Make sense?
Yeah.
Okay, so you know where to place your stop loss. If you enter here, your stop loss will go here. If you enter here, your stop loss will go here. Enter here, your stop loss will go here. Got it? Easy. And then you can just keep the ride on. This is this entire big move you can capture. Okay. And as the price, just this is because this is a bigger range. Okay, for the bigger range, this is the point. There's the real point where the bigger range actually ends here, right? Okay, now what do we see here? The price breaks through it, but the price keeps on going down and drifting forward. So what you can do, now how do we know? How do we know that the price will come here, reject, or it will go up, or it will continue to go down? What do we have to do? We have to draw the channel. As I told you, we have to draw the channel, and by knowing the channel, we will know what will be the next action, the course of action.
Draw the channel after it reaches the one of the reference line, is it?
Yeah. Because no, this is what, right? Because this is after falling through ice, right? We falling through ice. This is the second higher low after falling through ice. Am I right? So you can draw from here to here. Make sense? And if you draw from here, and now you see that just before breaking, what happens? We have a high volume here, but we are still in the middle. We are still in the middle of the range. We are not oversold. We do not have short-term thrust. We cannot take this trade like this. Do you understand?
Yeah.
Right? So what happens? The price reverse here, and then the price, and this is also a hidden spring of this one, right? So we can draw the line like this, and you see the price exactly acted over here and then fell down, right? So we have here this reference line. On this reference line, what do we see? If this is range here, and it's a failure point, and the next bar are very small bars, this means this has already failed, and we see effortless no result here. See? So this one has already failed. So we can draw the structure line over here, and right on this point, on this hidden spring, we can enter. Sorry, hidden upthrust, we can enter, or upthrust we can enter. Got it? Now we can enter over here, and we can go all the way down, just capture 2R, and that's it. All right. And now once we have seen this, now we have to readjust our trade. Okay, we have to move from here to here. Okay, make sense? Because this is a new entry point. And once we adjust this channel, what do we notice about it?
SOT.
SOT. You can easily notice SOT. How you can notice SOT? Okay, just compare this one, this range, this range. Okay, it becomes less and less. So it just becomes SOT, right? Okay, you can draw this range, SOT. Here is also SOT. And after SOT, what happens? The price drifts back and just breaks through it. So this is what we have a huge volume here. Can you see? This is selling climax AR. Okay, if this is AR, right? Because why this is AR? Because it is breaking. It is breaking this channel as well, and it is also, and it follows after this move, SOT move, right? Right or wrong?
Yeah.
Okay, good. We have a SOT here, we have a high volume. So this becomes what? Selling climax from via SOT. This becomes AR, the top point. Okay, why it is breaking through this one, right? It follows after this SOT. All right. So this becomes AR. And after this AR is also has the characteristics of JAC. Am I right? And I told you after JAC, what happens? There is always reaccumulation, right? So this you will not be taking this trade. Okay, why? Because we are against the bias. And if you take this short now, can you take this trade here below this reference line, hidden upthrust, hidden spring? Yes, you can. Okay, you can capture all the move up. All right, and you can take this upthrust as well, but you have to exit right over here. And then hidden spring again. What happens? The price goes up. Second entry. And now the price is also making another hidden string, another entry. And every time the price is making an entry, what do you notice?
VCP.
VCP pattern. This VCP pattern shows you obviously a reaccumulation. Obviously, after JAC, we also have a reaccumulation. We can also enter right over here. We know that the price will go up. The price will go up. Okay, at this VCP pattern. And now exactly, this is the AR line of this VCP pattern, right? The price will, in the future, the price will come back. Okay, test this line again, go up. Test this line again, go up. Can you see?
Yeah.
Went up. Test this line, went up. Okay, and then again, okay, this VCP is obviously what? Jump across the creek. This is jump across the creek, right? This is the jump across the creek of this AR, this VCP pattern. So what do? Once we have jump across the creek, we say that we have reaccumulation pattern. And now what happens? The price again jump across the creek here, right? We do not get any entry opportunity, very small bars, because the time is not good. Okay, the time is like early morning, 9 a.m., 6 a.m. your time. So now, as we are going through the breakout, what do we notice? We have, first of all, VCP pattern. Okay, in this accumulation, plus we have what? Build up, right or wrong?
Yeah, correct.
Okay, so build up, and this one, this hidden spring. Okay, during the build up, this is actually a build up here. So this one here, this one here, this one here are our entry points. This is effort versus no result. This is no demand. This is hidden spring. So yeah, all of these are good entry points. Stop loss can be placed right over here. Now you can enter and go long. Make sense?
Yep.
Yeah.
Makes sense.
Okay. And again, as I told you, if this is hold the reaccumulation structure, and the price again breaks the structure, what do you notice? This is jump across the creek. You can see the volume. Okay. So reaccumulation will follow, right? Again, there will be reaccumulation. And now what happened? We see the same thing. What do we see? VCP pattern. So VCP pattern, first low, second low, third low. At this, our VCP pattern was confirmed. All right. So we can take a trade right over here at this point. Make sense?
Yep. Okay.
Right. Stop loss here and then go up again. Okay. If you miss this one, here as well, we have no demand of the VCP pattern here. No demand. And it comes right on the moving average. You see, comes on right on this moving average. The moving average, this reference line. This moving average is also the reference line. Or you can also draw a line like this. Okay. You can also draw a line like this to capture the next move. So if the price comes below or comes near it, you can take your trade. Got it? Or you can use this moving average line as the reference line. Got it? Now, once again, the price breaks through it on a increasing spread, increasing volume. You can see. So this is again what? Jump across the creek. And I told you after JAC, what do you observe? Reaccumulation. Again, we will have reaccumulation. Now the point is when will our reaccumulation will over? Again, VCP pattern, and then we go up, right?
Yep. Okay.
So the point is when will this reaccumulation this section will be over? So what do you have to do? You have to let's suppose mark this one on a 15-minute time frame. This one 15-minute time frame. This is the first low. This is second low. Now you can start hiring the second low here. sorry, because we are on this reaccumulation structure, right? So we can draw from here to here. This is first low, second low, maybe from here to here, right? You can draw this structure here. So, but this was already a reaccumulation structure. So how would you draw this one? How would you draw a channel across here? Joining this first low, first higher low, right? This is first low, first higher low. Okay, first higher low, and then we join this one, and then we draw the line and see how far it extends. The price is near overbought. Now let's go to the 3-minute time frame where the price is becoming overbought. Okay, here the price is becoming overbought, but what happens? The price is constantly failing. Got it? The last push. Got it?
Yeah.
Okay, then go to the 5-minute time frame because overbought has failed. Where is it? Okay, the overfall has failed here. Now you draw from this structure because this is the point where which you've already traded. There was nothing like this. Now this is a low, and this is the low where the point failed. Okay, the failure of the, what to say, which one? The failure of the buying climax. And now you start drawing this structure like this. Okay, we can go to the 5-minute time frame to readjust the channel. Now you will see very clear. The price is going up now, but as we go down here, okay, we can still trade it. We can still trade it like a reaccumulation because we are not overbought yet. But as the price is going up, we notice what? On 5-minute time frame, SOT. And on this SOT, we know if we are trading this spring, let's suppose we are trading this spring, we have to exit right over here. Got it? Here, the bias is changing completely. Got it? Now, if this is SOT, obviously SOT is formed, and this is the entire channel. All right. And now we can just draw this line structure. We go to the 3-minute time frame. Okay, what do we see here? SOT, and we have buying climax, right? Buying climax, secondary test. Okay, after secondary test, we can draw another. This is first higher low, right? First lower high. And now this is what? Spring, upthrust, right? And this upthrust is what? Effort versus no result. Am I right? Now we can take this trade. Make sense?
Yes.
And now the price broke through it. You see, the price broke through it. Sorry, the price breaks through it. When the price breaks through the structure, what is this? This whole structure. It's also breaking through this channel. It's also breaking this through this range. This is what? This action is what? This action is falling through ice. Okay, on this falling through ice, we still have a selling here. Yeah, this is okay. But our major background says that there is a buying in there is selling in the background, and there is a little buying in the background, but the volume is not very high, so it's not very, a point of concern. But as we go up here, the same thing here. What do we see? Hidden spring, hidden upthrust on a very huge volume, and it follows after distribution. Okay, right?
Okay.
Now we can take this trade. Okay, placing a stop loss, you can go to the 1-minute time frame to make it more shorter in duration. Okay, I mean you will get more accurate entry with that and higher reward, and now you can extend it. And now the price also breaks this through this channel. So what is this? The price breaks through this first channel, and it also breaks through the second channel, this trend channel. What is this again? FTI falling through it. Am I right? This is second FTI. First FTI, second FTI, right? And I told you after second FTI, whatever follows is what? Redistribution. Am I right?
Yeah.
Okay. The price again, you know, we have this entry here, very easy entry. You can see. At first, no, the price goes down. Stop loss right over here. So again, 2R. And now, as we go down from here, what do we notice? Our first higher low was from here. What do we notice here? We see if we join this part here, this whole function, there is no significant trend here, but if you join this, actually SOT, right? SOT on this part, right?
Yeah.
Okay, SOT, the price goes up, this is AR. If this is SOT, this is AR, right? Secondary test on a higher volume, price goes up here, you can take your trade right over here on this part. But as the price comes back to this original distribution structure, this is the original distribution structure on the top. What happens? If this was FTI, then this must be what? Last point of supply.
Supply.
Now okay, from here to here, we have a minor shortening of the thrust and we have a reaccumulation, but reaccumulation will end up until the end of this LPSY region, this distribution end. And once the price reaches this region, it will crash because this will become LPSY of this distribution. Got it? Because this is FTI. And now if you want to further confirm it, why is it like this? You can just draw the structure. And this also becomes what? Overbought. So overbought combined with LPSY, test of this region, will give you a much more accurate ratio. And now once you have this LPSY, you can wait for the test here. Effort was no result, you can see. And now you can enter all the way down, placing your stop loss here. Make sense?
Yep.
Yeah, this is how you would trade your entries. Any questions so far?
No, so that's good.
No. Okay. So you know how to check the bias now between Asian open and open, how to readjust the trend lines. For example, you know, we have to readjust the trend lines. First of all, initially our trend line was from here because it's first higher low after this one. But as we go down, we see the new channel forming over here. So we adjust our new channel over here and we see it's so we have to keep drawing the lines and we have to keep drawing the structure. Okay. For example, the first time you might draw this channel like this from here to here. But as you go up here, you see the breach in value like this one. You can say, okay, I can adjust my channel from here to here. Got it? And now what happens? I can see SOT here. Okay, you see how by adjusting the channel, you can easily. So when do you know when to adjust the channel? The channel is only adjusted when you see either the failed buying climax or when you see the price breaches through the low and then reverse. Only then you will readjust the channel. Got it? For example, if you draw the channel from here to here, what happens? The price is what? Doing what? Breaching through the lows and then reverse. So it means that then we have to cover this point as well in the new channel. Got it?
Okay.
Yeah, then we will readjust the channel. And now what do we see here? We can shorten the thrust here, this one, and then the price fell down. Let me show you another one. For example, the first time you see higher low, okay, this one here, the first higher low was from here to here. This was the first channel. Okay, but what happens as you go down here, you see, you did not see any kind of failure. You do not see any kind of failed, what to say, selling climax or failed SOT, right? So you will keep this channel like this. But as you go along, what do you see here? SOT. So you'll mark this channel and line SOT and then reverse. Make sense?
Yeah.
Okay. All right. Now let's see the channel here. This one. This is a huge channel. For example, if you start drawing the channel over here like this. Yeah, this channel is perfectly fine. But what happens? You see this kind of action. the price breaches in spring and it comes out of this channel line. So it means you have to readjust your channel by including this point. So we can draw this last point and this point. Okay, make the channel. This is not much of a channel. This is just a straight line. So right, and then we can just wait for this point here. Price goes up. Now we can draw another channel like this. Readjust it. Highest point. Okay, and then what do we see here? Okay, yeah. Okay, we see kind of shortening of the thrust over here for this process. Okay, and then the price just comes down, very small one, and then the price comes back here. We see a huge volume. You will see a huge volume here, huge volume here, and the price makes overbought, shortening of thrust, and then price fell down. Okay. Now you see here, this one here. If you draw the channel from here, okay, this point will actually disturb the channel. For example, if you draw from here to here, this point will actually disturb the channel. So you have to readjust your channel from here to here, second time. And when you readjust, you can easily see what? Overbought, right? If you draw from here to here, if you draw from here to here, you might not, you all see the overbought. So it's a fine because you do not have any violation here because this one is the first violation and the price reversed here. So it's oversold and oversold has worked out because it has returned back to the trading range. So you can just draw. You don't need to readjust. So you have to think whether you have to readjust the channel or not by seeing the scenario and by seeing whether. Now, for example, when do we have to readjust channel? For example, this is a channel and I see the price goes up here and then reverse here and fell down without any cost. Now, this data point is outside the channel. Am I right? So I have to include this channel. Now I have to draw the channel from this point or this point or this point, whatever the suitable condition is, like this. Got it?
Yeah.
So readjusting a channel is very important. For example, this one here. What happens here? What do you see? You have a channel. What happens here? The price is coming outside, right? So it means this needs readjustment. Okay. And what do we see? This is actually shortening of thrust channel. Price goes up on a huge volume, comes back, first higher low, test it out, and the price goes up. Make sense? But why this channel is not producing big moves? Why? The reason is because see the time here. It's already a closing time of the market. Okay.
Okay.
Yeah, let me see this one here. Now, if you draw the channel from here, it will be very huge. But once you see this bar here, okay, the price is already played out. You need to readjust the channel the second time from here, right? Yes. Now you see what? Goes up here, secondary test, of course, no result. Test here, you see how readjusting channel gives you a good trade. But initially, if you draw the channel from here, let's suppose this is the first low from here. What do you see? We did not see any kind of shortening of thrust. We did not see anything. It's just like that. The price just deviated like this without any cause. But it is because the price is actually coming out of this situation. This one is obviously shortening of the thrust, and this is effortless no result. The price again breaks up, and then again, you see, build up, and then price goes up again. Can you see?
Yeah.
This is accumulation. After accumulation, we see the channel here, and this is jump across the creek. This one, this whole move jump across the creek. After jump across the creek, we have a reaccumulation. After reaccumulation, we can take the trade. The price goes up, test back here, test this region, and rather than it builds a build down, okay, near this resistance, and this is coming after the reaccumulation, and the price goes back up again. See how it plays out. But you can also use the eye to determine the buying climax. Okay, let's suppose here. This one. If this is buying climax here, the price goes up here, okay, and then price fell down, but we did not get the opportunity. It comes very hard, right? We can enter the trade right over here and goes all the way down. And now what do we see? We are coming towards this low. Okay, we are coming towards this low. And as we are coming towards this low, the price is spring here, test of spring, and we have shortening of the thrust. Can you see?
Yeah.
All of
See
these
it.
things combined will give you a trade. Okay. So at this point, once you see this kind of shortening of thrust and it's coming the near level, near the accumulation level, and you have a spring in the background, you see the price is approaching here, and you see this huge volume occurring over here, you should get out of this trade. You should stop this trade. You should get out of the trade, and now you should be looking for long. Okay. So you can catch all this move up to the upside. Obviously the move will ultimately go to this side, right? This level, last one. Price goes to this level. Here as well, we have a buying climax here. Let's suppose here, this one. Okay. All right. And now what happened? This channel of thrust, and as the price is going up, what do you notice? SOT. Am I right? The price is forming SOT to the upside. And first touch, second touch, third touch, and test of this third. This one, effort versus no result. After third touch, this is the point to go down. Can you see? First touch,
Yeah.
second touch, third touch, and then after third touch, we have effort versus no result. And then after that, we go down after SOT. Okay, here the price is going down, and here what do we see here? Again, SOT. Can you see SOT here? Very simple. And then after SOT, price goes up. Okay, here as well, the price goes up here, SOT, price comes down. Okay, here as well, we go up in a straight line, and then what happens in the last? What do we see? We see SOT here, and after SOT, after third SOT, we have effort versus no result here, we go down. Can you see? First touch, second touch, third touch of SOT, and then the price comes back and tests this region on a effort versus no result bar here. Price comes down.
Okay.
Here as well, we have SOT. After SOT, first touch, second touch, third touch, and after third touch, what do we have? Effort versus no result to the downside. And of course, this is coming from accumulation, right? This is accumulation structure. If this is accumulation structure, after accumulation, falling through eyes, what do we notice? What do we have? Reaccumulation, right? And the price is coming back, and this is AR. The price is again coming back to the AR level right over here, and we form SOT. Now SOT is formed before touching this line. SOT is formed, and you see hidden up thrust here after third touch, and then you see this confirmation here. You can enter long without even waiting for this line. Got it?
Okay. Understand.
Because SOT can give you SOT can give you a trade opportunity if you see SOT. This first touch, let's suppose you see first touch, second touch, third touch, and now obviously you can draw SOT here. After SOT, this is what first touch, second touch, third touch. Okay, and then after SOT, what do we see here? Effort was no result. Okay, we can enter right over here, but we need a bullish confirmation, and we need a bullish confirmation. We saw it, and then we can enter right over here. Okay, this is first SOT, first touch, second touch, third touch, and you see at this one, effortless no result. We go down. But because we are coming out of the accumulation, we are coming out of the accumulation zone, and this is reaccumulation structure. So we cannot take this long. We cannot take this, like a huge sell trade. Got it? How about looking at this? Is it SOT? This one, and this one. Yes, it is SOT. But depending on your situation, you will take your trade, because if you see this structure on a higher time frame, then this is jump across the creek. And I told you, whenever we have jump across the creek, then this would be what? Reaccumulation.
Reaccumulation.
Now we have a spring, test of spring, effort versus no result. We can take multi opportunity upside. But it depends on the situation. But what happens now? If you draw the major structure, you will see that we are also reaching overbought region. That's why the price reversed over here at this region. And you will see the very, very high volume. Can you see the highest volume in this part?
Yeah.
So this is actually, if you draw the structure, if you draw the trend line here, right, and if you on a higher time frame, you will see this is overbought. Yeah, it is accumulation. From this perspective, it is accumulation, but this reaccumulation has reached the overbought region. That's why we cannot take this a very huge trade, right? We can only take a small amount of trade until this point. Okay. And now we have hidden up thrust, and you see here, very easy to understand on the third point. What do we have? Hidden up thrust or up thrust, right? Hidden up thrust plus up thrust. We can take the trade and we can go down. And now once again,
Hidden upthrust should be, sometimes high volume, sometimes low volume is okay. Right?
yeah, it's okay. Okay. It can have low volume, lower than the previous two bars, like this, like a no demand type of volume. Okay. Or it can have a high volume like this, Just remember this.
Okay.
But okay, only these two situations. For example, this one here, this volume is effort versus no result type of volume. This one is, this hidden up thrust is no demand type of volume, no supply type of volume. Okay. This one is effort versus no result type of volume. Right?
Yeah.
And let me show you more here. This one again, this is not this is not the one we are looking for, because we do not have effort versus no result type of volume. We do not have no demand type of volume. Okay, got it? So this is not the ideal hidden up thrust. Oh, sorry, hidden spring or key reversal. This is ideal one. This is ideal one. You see, it is effort versus no result type of volume. This one. Got it? This one is ideal one. Why? Because it is no supply or no demand type of volume. But this one is not ideal one. Got it?
Yeah.
Okay. So I think we should end the session now. Okay.
Okay.
Okay. Bye-bye.
Bye. Thank you.
Yeah, okay.